and risk-off sentiments continue to reverberate in the Nigerian equities market today, with the absence of positive triggers to turn the negative tide for the market. Equities posted a 2% loss last week and are on course for additional decline on sustained sell pressures. Praise Ihansekhien, an investment research analyst at Meristem Securities, joins me now for a market update. Thank you so much for your time today, Praise, and let's look at what's driving sentiment in the market today. I see that there's a rout. Midday was down about 1.5%.
Hi, thank you for having me. Good afternoon, everyone. Yes, so the equities market has been in a negative mood for about 4 weeks consecutively now, and then we don't expect that to change at least this week. For today, like you said, the market has closed down. The market is expected to close down. As at last check, it was closing down about 1.54%. And then some of the stocks or the tickers that we saw that were marked down today include Zenith Bank and I think UBA. And I think MTN is also one of the major stocks leading the down close for today. So yeah, the negative triggers are just broadly there in the market, and we're not expecting that positive sentiment to return this week.
Yeah, because I'm looking at the companies that are down today. We're looking at some not so usual suspects. MTN Nigeria, like you rightly mentioned, 6.7%. We're seeing International Energy Insurance down 7%. We're also seeing Champion Breweries down about 9%. For some of the gainers today, we're seeing Transcorp still continuing to move on strong. We're also seeing AXA Mansard Insurance and Ikeja Hotel. But we're looking at the market down in about a month, about 7% down when you look at it in about a month. And any respite down the line in terms of catalysts that could trigger this?
Broadly, the market tends to respond to corporate actions, and then there are things that tend to boost market performance. And one of the things that was expected this period would be that the full year 2022 full year earnings releases, dividend announcements are things that would boost interest in the market. But some tickers have not really witnessed that. That GTCO released announced a very interesting dividend announcement, but still it's the performance of the company kind of is kind of negative on that aspect. So broadly looking into and anytime this year, we'd expect any positive corporate action that will come up would be a very significant trigger to the market. One other thing that I think that analysts or even investors are very keen on is the Monetary Policy Committee's response to, are they going to continue hiking rates? How is the fixed income yield going to continue doing? Because that recently, while the fixed income yields haven't really gone in a particular direction, but we've started to see some increase in the fixed income yield. So that also tends to have an effect on what equity market participants are going to do. And then, of course, everybody's going to be watching out for what the Monetary Policy Committee is going to still, are they going to continue aggressively hiking? Or is the tone, the tone has kind of changed. The tone has changed to still going to hike, but not as aggressive as before. So if they continue with that stance, there's a likelihood that some positive sentiment might come back into the equity markets, in the nearest future.
But Praise, very quickly, what sectors then can we watch out for that in the second quarter?
Okay, the banking sector is always a very major sector of focus for investors because that's one of this, that's where we have significant dividend yields on some of the banking tickers, and then liquidity on the banking tickers are actually quite higher than some other tickers too. So banking tickers that's one ticker that investors will always look out for, barring the fact that a lot of banks were, exposed to Ghana bonds and then the effect of impairments, and also that kind of affected their performance in 2022 full year. But for 2023 full year, we are not really expecting that level of impairments that we saw last year, to occur again. And then one other sector that maybe investors would also be keen on looking at is the consumer goods sector. Interestingly, while all other sectors closed negative last week, the consumer goods sector closed positive. And the consumer goods sector is one of the resilient sectors, we would say, because they play in a space where they can transfer the rising cost that is affecting margins to consumers. And so in a way, the consumer goods sector is able to protect margins. Some players in the consumer goods sector, maybe I should rectify, are able to protect their margins compared to others. Maybe other sectors will include insurance, because the insurance sector also, maybe investors are not so quick to react to information in the insurance sector, but that's also one sector that has potential to give significant returns for investors.
All right, yeah, definitely. Like you rightly said, the consumer goods index, one of the resilient sectors, up about 18% year to date. Also, we're seeing the oil and gas index up around 10% year to date as well. But thank you so much for that praise. Ihansekhien, the investment research analyst at Meristem Securities.